Hey, good morning, everybody. How are you? It's Tuesday before the Fed meeting. Well, I guess technically the Fed meeting starts today, day before the Fed announcement. So that's Tuesday, July 25th, 2017. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. How are you doing? My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay. Let me give you some eye candy. There we are. That's me. Do these sessions 7:30 in the morning, Monday through Friday, just for you. Thank you for being a client of TradersWay.com. If you have not opened a demo or a live account yet, please do. I'm here to help and earn your loyalty and respect, and that's how you show it. TradersWay.com. Oh, is it Christmas in 150 days? That's cool. Didn't know that. Say I don't track these things. All right. USD Kitty CAD. This is the tricky one, right? Where yesterday we knew we were at monthly target, and every pip beyond that is less predictable than the one before. Okay. So it has gone a little lower. If I now zoom in, but not quite off the pivot. Don't know what to make of that. It looks less reliable than the other moves. Maybe, just maybe, you can see I got a trend line here. There's sort of a micro breakout going on. Maybe. I'm not saying there is, but I ain't saying it ain't. And there's a previous roll reversal here. I think we said, come on. I think we said yesterday that this area was a sell zone back here, which, you know, you would have made money, but is it still doing it? Don't really know. Right? So if you're watching this and you're a bull, for example, you might be trying something like this. Okay? And then we got this to contend with. Not really sure what's going to happen there. Okay? But looks less and less ideal for selling unless you're trading this, unless you're trading sort of this move down, which we got retracement into this roll reversal, and then down. Okay? Now, for this to continue down, what did we need? What did we need to happen? What was the correlation we discussed? Oil. So oil jumped $1 something yesterday, and the media freaked out, so to speak. Oh, what does it mean, Basil? What does it mean? Wait, we've been saying that oil should go up since last week. I don't know. What do you stink? If it's unpredictable, then I guess we're geniuses. It must be true. Yeah, congratulations. You meet somebody at a party and they're standing there with their cocktail and they're like, hey, what do you do? And you're like, oh, I'm a genius. I mean, that's pretty much it. So oil's going up. Great. Wonder what will happen around $47.85. Isn't that lovely? So, well, you can't say reverse yet, Mike, because we're not at resistance. Oh, up in there? Well, that's where you could say you could develop a trade plan in which entails looking for smaller time frame reversal patterns specifically at that price level. No, why? Is there something wrong? Uh-oh. What do we got? Russian hackers or something? What? Looks fine. Yeah, I just logged in. It looks fine. Yeah, it seemed fine here. Oh, is that right, Joe? That's interesting. Well, if there's a problem, let me know what the problem is. I'll go to the Trade tab. I thought you said it was the Webinar tab. Why? Well, just tell me what's going on. Look, I can't do that in the middle of the webinar. But anyways, nothing really happening yet. Selfies. I don't have selfies. All right, let's hang on. All right, so you mean it's somebody is posting fake trade plans kind of thing? That I have to like waste my time banning people? A waste of time, huh? All right, hang on. Dude, I don't see anything unusual. It's Forex trading I use. Yeah. I don't see any problems. These are all good-looking trade plans. At the top. But I don't know what you're looking at. Now everyone's fired up. What selfie? Oh, no, then I clicked on webinar and it loads a webinar. I mean, it loads the webinar. See? It's logging me into the webinar now. See? Whoa. I don't want to do that. All right. One home page section, scroll down. All right, we'll go to the home page. So maybe they're not going into the trading section. Maybe you meant, all right, so it's going into some other place. Oh, I see. Funny. All right, these. All right, so that's not a trade section. Yeah, I get. Why would you do that? I don't know why you do that. But maybe they're here. Whatever. Yeah, I don't know what that's about. No, it's because they're posting into some weird area, so I guess I'll ban them for life or whatever. I'll try to get some time. All right. So when I upload this video, that will be replaced. All right. So anyways, MoveOn.com. Nothing going on with the euro. Still thinking about setting up the pig. Remember, we have two areas. It's this pivot here or the top already outlined. So their trade plan's already in place. Just waiting. Okay. Now, really, I think it's going to be this now because this first opportunity in here should have already carried out. We should have already had it. Okay. It should have just been straight up, straight down, but it didn't do that, so most likely it's going to double top now. If anything at all. You know what I mean? Right. So anyways, could be interesting there. Got to watch that area. Kiwi yen, 382 predicts a 1618, right? You guys know that, right? This 382 predicts a 1618. Straight out of the textbook. Okay. Three-wave correction sort of thing. Off to the races the other way. The other interesting thing about this is that this is a swing long entry for bulls for a weekly swing. Okay. This is a weekly sell. This is a weekly buy, although it's not as perfect as a sell. Oh wait, I thought that was a pivot. No, that's just price. So anyways, we're just kind of languishing in here, but we got something going on down here. Yeah. Okay, I just want to zoom in a little bit. Monthly M2, I got to get in there like maybe a 15-minute chart. Look how precise it is. Do you see that we're talking to the exact pip? It touched the monthly M2 and never went one pip lower. So, could be interesting. And gold. Do you remember that whole rule? If you hit the target early in the process, it can go back to the central pivot. Look at this one to there. Amazing, right? So, like, let me mark this up for those newer to pivots. This predicts a green zone, and if you hit the green zone early, it predicts this. This is an R1, which predicts S1. Yeah, look, it hit it a day late. This early hit predicts this. It's amazing. So anyways, we're talking very, very tight lines. It's gorgeous, isn't it? What an amazing coincidence. USD Mexican peso is reversed. Well, you might want to wait and see what the FOMC says tomorrow. Or not says, what statement they release. It will probably be relevant to the pricing of gold. But I think a more interesting question, instead of like, where gold now, is observe the behavior of what gold does the day before it can be repriced. See, I look at this and I think it's moving because of the ECB, because of the Fed. They're squeezing these moves in between the fundamentals, right? So it's not like what will it do now over the next few, in the next 24 hours. It's more like what happened up until the 24-hour window. And they played the market incredibly technically with very, very specific price levels. And I don't think it's a coincidence that we just kicked off a monthly central pivot point on the exact day that the Fed is starting their two-day meeting. But I think that's the interesting part. Okay. If you're a bull, you're buying it off the 21. I mean, that's really basic analysis. And if you're a bear, you're going to probably hope for something like this. Am I right? Right, I don't really see any other scenario except sideways, and sideways is very similar because when you get down into here, it just kind of, we're like this for a while, basically, off of this area. But I don't really think consolidation with a Fed statement, although, it's not a live meeting, so. No, Mickey, they're dynamic levels of support and resistance, so they're valid on all time frames. But I look at this, and the two most important things on this chart is the monthly central pivot point and the 21 EMA. Okay? So if you're trading like I teach, like the basic FX boot camp rules of engagement, straight out of the textbook kind of thing, is, you can be longing here, taking profit, going long here, and taking profit, and waiting to go long again. Okay, so I assume you know that much. At this point, then folding in the pivots and the Fed meeting adds levels of complication. But you could just be simply waiting for a 5A cross up. You don't need to be too much more sophisticated. Okay. But also, what you might want to do is really, so I have a feeling that some of the newer traders don't spend enough time observing. you spend more time trying to like remember rules or something, or look for a formula. I'd rather you look at this chart and say, are professional gold traders using monthly pivot points? And then ask yourself, looking sort of back over recent history, how would you have traded this? Right? So, like, I could change this and look at it from a weekly point of view, and then ask myself the same questions. Okay, so let's observe. Are professional gold traders using weekly pivot points? Let's find out. Which do you like better, weekly or monthly? Cedric, the currency trader, says likes the weekly. Cool. But this is what you should be doing. To me, this is analysis when you're asking yourself these types of questions. Now, what you should look at over time is how monthly, so we know this is the monthly bottom. What pivot point is it on the weekly? What weekly pivot point is it? M2. And what kind of pivot point is that? Is that a buy pivot or a sell pivot? All right, so we know this area here is where all bears are going to exit based on the monthly analysis. And we also know this line happens to be a buy pivot. So not too complicated, right? You know, that's where weekly buyers are going to buy, and we know where it also is the area where monthly sellers will exit. Right, well, that's what I'm talking about, Joe. That's an exit pivot. So no bears, and right, a decrease in bears and an increase in bulls. It went up. Well, yeah, of course it went up. Okay? But it starts with the monthly, isn't it? I think it starts with the monthly. But the weeklies are not invisible. Do you think some people scaled out of their trade? I say, yeah. This is a take profit area. So what's so special about this M3? Nothing really. It's the monthly central pivot point. Okay, so let's add some color here. Let's do the time warp. Okay, so along with this blue is highlighting that it's a monthly an important monthly pivot. The black is still there for the weekly. And here, again, this is a monthly important area. Okay, you can see how weekly still impacts. And then look at the moving averages. right? So what I used to teach 100 years ago for a basic trade plan, for example, the easiest trade ever is you observe the 2155 cross and you take the next 5-8 up. Now, this one is also tradable because you would assume it's snapping back to the 200, but the easiest, most conservative one is the 2155 cross, long bomb it here. Without even considering pivots and all that kind of stuff. So you can see that moving averages are important. You can see that weeklies are important. You can see monthlies are important. What about changing the time frame? Tradable? Well, no, George, because that wouldn't be a part of a pivot strategy. The target's already been achieved. So all we've done is hit our counter trend target. What happens after that is random, according to what the Fed says or doesn't say, or puts on the statement or doesn't put on the statement, and how the market runs out the clock into next month when we get new pivots. Oh, well, there you go, Joe. But I've been teaching it longer than 5 years. I've been teaching it 13 or 14 years. It's a shame that nobody listens to me. Yeah. Yeah, I know. That's amazing, huh? What's a guy got to do? All right. So anyways, I'm giving back. I'm giving back, Joe. I'm trying to save the world one trader at a time. Okay, we got to zip over and do the beast, kind of promised. And I think I'm short. I think I got a pound in there. 1, 2, 3, 4. No, it should work. Let's see. Yeah, okay. Beast! Somebody was freaking out. Look at the beast! Look at the beast! Oh, look, it's a pivot point. Kicking off the M2. We just went through it, but let's do it again. Is M2 a buy pivot or a sell pivot? Yeah. Okay. And it went up. Yeah. So my advice to everybody is if you happen to be a bull and you were waiting to buy it, you probably would have seen this cluster and you could have been sitting around waiting to buy it. There's a clear 5-8 cross on the 4-hour. So you only had 2 days to prepare for a long. You're like, but I don't have that kind of time. Okay, you see the reversal pattern? Let me draw this. You know what? Let's just do it this way. Okay, So we have a triple bottom, 1, 2, 3 reversal. Boom, shalaka-laka. Am I a bear? No. No. I'm not a bear. Not necessarily a bull yet either. I said don't be surprised if these pairs come all the way around. But do you remember I said that while buying the Kiwi yen? And you remember I explained it? Like, yeah, I know it's coming down, and I'll probably lose money, but I'm going to buy it. So you got to put it through that filter. Okay? Technically, this is still bearish. But what I'm telling you, and it's worth saying it, every day, so I'll say it. When you become a professional, you will realize one day that whole change from amateur to professional, from, let's say, making modest wins at best to actually having a career, is when you've learned that you're the one in control, not the market. That's it. Forget about the market. You won't be able to figure it out. That's what they tell me at Harvard. There's some pretty smart people at Harvard, but they're all wrong, of course. But they'll tell you you can't predict all this stuff, right? So what you end up doing to be a success is you make the decision. So if you say, yeah, I see it coming down, but I'm a bull, then all you do over the course of the next few weeks is find the price levels in which you will consider buying and looking for the technical entries. Technical entries being reversal patterns, moving average crossovers, oscillator cycles, hocus pocus, whatever, right? But it's the fact that you know what you want to do and you know the prices in which you'll consider doing it. And thirdly, you're looking for evidence of it happening, and boom, you pull the trigger, long and gone. Okay? Right? So there's nothing here to say that this would turn bullish. That's the problem. So an amateur sits around waiting, and by the time they buy it, because it's been bullish, it will stop being bullish because it's moved into someone else's sell zone. So as soon as you buy it, the guy that bought it a day before you did is going to dump it, cash out, and you're the one paying him or her. You see it? You know what I mean? Someone might say, now I got to buy it. Well, someone else is sitting around thinking, oh, I probably need to sell it around the M3. Look at this, this roll reversal. This is just a 3-wave, right? So your Elliott wave guys might be doing something like this now. They're like, oh, yeah, it's going to finish this move here, right? But then it's going to go, Totally. Okay? And you don't know that's going to happen. I don't know if it's going to happen. But if you are a bear, not even looking at this chart, if you're a bear, what are the prices you want to sell? You're like, well, first of all, I'm going to consider M3 because it's a sell pivot. Then I'm going to look for roll reversals, and I see something going on in here. And then maybe I'll fib this sucker. And I'm going to look at this as a move, right? And this is a 50%. So yeah, if now, in this kind of area boxed in, if I see shorter term reversal opportunities, I'm going to dump it. See, that's what a bear is going to do. And if a bear does that, there are only two scenarios. One, the market agrees, this thing drops, they make money, or it pops up, knocks them out, and they lose money. But the win is significantly larger than the loser. That's it. That's how you're a professional trader, because you've decided. You're not looking for answers. There's no formula that says, well, you should wait for this, and then you should trade. No, it's the decision process. Something just went weird. Oh, is it? Okay, so you got to get there at some point. Make a decision and be prepared. So someone might want to sell this, but conversely, if you wanted to buy, if you wanted to be a bull, this is a buy, and this is the monthly central. There's no doubt in my mind that you could potentially say to yourself, if it turns bullish in here, I would want to buy because I am also, me too, bullish, right? So now you just need, I don't know, how about a breakout, pull back 1, 2, 3, off of a reversal pattern? Would you consider a triple bottom on a weekly M2 followed by a higher high, higher low, 1, 2, 3 reversal on top of a triple bottom reversal on top of a monthly buy pivot on top of a month? Oh, yeah, gee whiz. Of course you'd be long if you were a bull. And everyone else is trying to figure out why. Like the people on TV. Why did oil jump over $1 yesterday? It's unbelievable. It's unpredictable. It's chaos and out of control. I'm like, dude, we talked about that like last week, this week. I've drawn my little lines. Why did oil go up? Well, isn't it supposed to go up? I'm like, right? What do you mean you didn't know it was going to go up? Of course it's supposed to go up. Didn't you look at the chart? Didn't you look at the market? How could you not know? Cool. So, now what do you want to do? No problem, Jorge. So here's the roll reversal. So that should be in your trade plan, right? If you were a bear. Right? Do you guys want to be the type of trader that makes a solid trade plan based on real technical and fundamental analysis? Or do you like tricks and shortcuts? What do you want to be when you grow up as a trader? See, when I watch like YouTube videos, and my YouTube videos actually, there seems to be a lot of advertising by a educational firm out in the world to get you to learn like tricks, right? Tricks. And I find it a bit depressing, you know, like these rules like you look at this thing and then you look at this thing and you put a buy here and you put a sell here, and when it breaks out you can make 25 to 50 pips every day. Look at all the pips you're going to be making. What? You know, and yet if you knew what you're doing, just at a basic level, you would know based on price action alone that this is a sell. Oops. And that you wouldn't throw away the London Open. You'd be prepared and say, dude, if this spikes up and hits this role reversal, I'm going to look to sell. And look what happened on an hourly chart. Imagine you were watching it on like a 15-minute chart or a 5-minute chart. I don't think I can go back that far, can I? Where is it? Is it this? Yeah, I guess it's this, isn't it? So like at what point do you start trading this? If you know you're already a bear here. Whatever. I'd rather you do your analysis. I'd rather you understand the fundamentals. No, but Hojo, you don't, right? A whack-a-mole game. Yeah. So here's what you do. You flip a coin, and that's what you're going to be for the next 3 months. That's the first step. So you take out a coin and you flip it, and it'll tell you whether you should be a bull or a bear on the US dollar for the next 3 months. Okay, Hojo? That's really. I don't care how you make your decision, whether it's based on fundamentals, long-term technicals, or a flip of a coin. Yeah. No, but like seriously. Now your decision's made. Yeah, I highly recommend any fundamental decision, whether you use my course or not. You know, but the point is, you have a bias. You've reached it. I don't have to agree with it or like it. I could disagree with it. Doesn't matter. But if you're going to be a successful trader, you need to have a bias. You need to be the decision maker, like I just said. And when the market happens to agree with you, Hojo, you're going to make money. And when the market doesn't agree with you, your trades are either going to lose because their losses will be small, but most likely you'll never really get a trade setup. You'll get significantly less trade setups. Because if you're bullish and the market's falling, you're just not going to get a lot of bullish setups. Because it's bearish. Right? And maybe you'll get a false bounce at a pivot, so you'll take it, and maybe you'll break even, maybe you'll lose some money. But it won't be that big of a deal because it just collapses and keeps going. And you lose a little bit. And you're like, well, I bought it at a good price. I got a reversal pattern at a support. I understand at this point it was a counter trend trade, so, you know, nothing ventured, nothing gained. But when you get it right, when the market agrees with you, you buy a reversal pivot with a reversal pattern, and all of a sudden you're like, up, 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 and you're like, oh man, I made money. But either way, you did the exact same thing. You bought at support with an technical entry based on your bias. If the market disagrees with you, you break even or you lose a little bit, but most likely you just don't trade a lot because the market disagrees with you. But then when you get it right, when the market agrees with you, because your trade will be exactly the same thing, same type of entry, kicking off of a moving average, kicking off a pivot point, whatever it is, but the market agrees with you, now you get paid. And sometimes you're running these things not just a day or a week, but you might be running them a month. We're preparing, not quite yet, but soon we'll be preparing for trades that will be in for 2 months, maybe 3 months. You might have never done that before, but I'm going to teach you. Cool. And you'll say, I'm the greatest trader in the world. I'm like, no, actually you're not. You bought at support, and we're currently in an uptrend. It ain't you, son. It's the market. Okay? What video is that? Wayne's FX Bootcamp video. Interesting. Yeah. So anyways, that's how you do it, Hojo. Wayne McDonell's ultimate Forex setup. Cool. I don't know what video you're talking about, but cool. But John knows. Listen to John. So anyways, that's how you do it, Hojo. Flip a coin. You'll do so much better as a trader. And you know what? If you flip a coin in your bull and the market falls and falls and falls and falls, then one of two things are going to happen. Okay? You flipped a coin and you're a bull, but for the next 4 to 5 weeks, even though you're a bull, the market turns bearish. Okay? And in that scenario, what will happen is you could give up and just start trying something else, in which you have now decided to fail, and you'll fail this year or next year or the year after, but you'll end up trying 19 different ways to trade, and eventually you'll fail. And it has nothing to do, I bet you all 19 ways would work. The reason it failed is because you might be the type of person that gives up and is trying to look for a quick fix. No, you'll try 900 different ways, but that's not how to do it. So the way to do it is simply to be patient and disciplined. And the fact that you waited 5 weeks for the market to agree with you, that is the part that will make you a success. That you're like, nope, not a lot of trades this week. I'm a bull. Oh, we're not quite in the support area. Oh, not quite a pivot point. Oh, not quite a reversal pattern. Oh, almost here, but not quite. And you go weeks, and it keeps falling and falling and falling. You're like, not quite yet. But what will happen is then it'll go up for 8 weeks, and you'll crush it. You'll kill it. You'll just be drowning in dips. And the person that chases price didn't make money on the way down. See, you might be thinking, oh, if I'd only been a bear and started selling all the way down, I would have made so much money. But think of what amateurs do. They always think that they would be making money doing something else. What they don't realize is they would still screw that up and lose money on the way down. So the best upside as a new trader is when you're wrong and the market's falling, you're not losing money. It's that patience and discipline that makes you a success. And then when the market does suddenly agree with your bias, now you get entries. Most of your trades are profitable, and that's what we want. But if you swing both ways like a broken gate, you're not going to have consistency. You're not going to be prepared. You'll be looking at your charts for answers. And my friend, the charts don't have answers. The charts are algorithms. All they do is read price and time. And then you throw in some algos to print like pretty colors and stuff like that. You're the one that's supposed to have the answer. So if you flip a coin, get yourself an answer, and then you have the patience and discipline to carry out your bias, I think you have a chance of being a success. If you could probably teach me 19 different ways to trade, and I could probably trade them and be a success. So it's not like what makes you pull the trigger that makes you a success. It's just the patience and discipline of carrying out whatever strategy it is. Whether you're a scalper, a spot trader, a swing trader, a position trader, whatever. If you lack the patience and discipline to carry out the strategy properly, then you just won't be a success. It doesn't matter what strategy you're trying, right? So that's the kind of thing we need to work on first and foremost. So flip a coin, you'll be a huge success. Killer bees, huh? Like, let's just top this off and end with this. What's my bias? My trading bias on USD Mexican peso. I'm a bear. How long have I been a bear? Well, forever. Honestly, forever. Been a bear forever. So I got to go up further. Okay? So you might look at this and say, oh my gosh, my strategy is horrible. Right. But I time it appropriately based on fundamentals and technical analysis. And even though it's been going up for all this time, I think you'll find that there are plenty of opportunities to make money. Some make a little bit of money. Some make no money at all. But when the market agrees, it does so much better. But I'm not looking to the market for answers, am I? Okay. So these vertical lines represent areas in which I would sell. I think we're missing one. There's a sell in here that it only fell for a week. So yeah, that one sucks. Right? So some of these suck because they only fell for an entire week. Some are better because they fall for an entire month. But I don't do anything different. I don't dictate how far it falls. I'm not in control of that. But I am in control of my behavior. I know what I want to do. I know when I want to do it. I can identify the prices in which I'll consider it. That's called a bias. That's called a trade plan. I just don't know if I'll get the entry or how long I'll be in it, because it's not up to me. So why couldn't you do that with, I don't know, Euro USD? Okay. The next trick is to know when to change your bias or go neutral when your fundamentals and technicals and all that kind of stuff, right? So like, you can see there's a point in here which it stops behaving bearishly, right? And that's why we do technical analysis, to know when you're bearish and aggressive, or bearish and conservative, or bearish like don't want to trade at all at the moment but would like to be a bear. Trying to draw this up, but okay. That's why we do analysis, so we know when to hold them, know when to fold them, know when to walk away, all that kind of stuff. Okay. Kind of neat, right? You got to know when to hold them, know when to fold them, know when to, what in the heck are you talking about? So this happens to be the price. Right? This happens to be the price. Let's take a look again. Let's make this a different color. What do you want to make it? Dodger blue? Okay. Are you ready? Oh, I gotta turn that off. Oh, what? 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 Is that right, Chuck? Okay, cool. Yeah, well, it has to do with the calculations, Chuck, right? High, low, and close divided by 3 gives you the central. But how do you calculate the M4 and all that kind of stuff? Well, you look at highs and lows and so on and so forth. So that's just, it's how, yeah, it's an M4 because it was a high. It's part of the formula. All right, guys, I gotta go. Somebody's calling with more money than God. So let's wrap up tomorrow. But I'm just saying, if you happen to be a bear, you got some resistance. You might want to pay attention technically and start planning it out as a professional money manager and control. Yeah, I know Euro's been up for weeks and weeks, months now. Now, the fundamental flow behind it has to do with the United States is just too expensive. So you might as well buy some, 500-year-old bank in Italy for 30 cents on the dollar. That's kind of what's happening now. What can I say? So why don't we gather here as a band of brothers and sisters, and we'll continue our conversation tomorrow. Okay? So remember, I'm not trying to put you into trades. I'm trying to teach you how to trade. I hope you're okay with that. Right? I'm trying to help you be a better trader. I think that's our social contract, isn't it? Right? And I hope you feel like it's legitimate help, not some dog and pony trick. I mean, yesterday we did economics, right? Supply and demand curves, right? Shifts in supply and demand curves to create new price equilibria. I mean, like I want you to be an amazing trader, not just someone that throws trades down and buys a yellow Lamborghini. Great. I want you to be able to be the master of your own domain, take care of yourself, take care of the family, your friends, your loved ones, and be an inspiration to the world, because the world needs inspiration. So I'll see you tomorrow. Thanks for being on my team, guys. Cheers.